like an accountant lined up. Hey there, morning everyone, and welcome to this morning's edition of the MPC Markets Morning Call, 14th of May, 2026. What is it, Thursday? Inflation comes in, and this is, and I've got to say, I stole this from Reuters. I love a good pun headline. Inflation comes in PPI, being hot, but stocks in the end don't care. So that inflation number was, pretty significant. We're talking 1.4% month on month for producer price index, the largest uplift since March 2022. That's 6% year on year. So like stocks, obviously, the usual suspects. You got your memory stocks here, the likes of CrowdStrike, Palo Alto, and those cyber stocks, and spotty parts of the chip stocks are heading up. There's some joy in the healthcare sector. Tesla kind of it's a bit of a chip stock. It's a bit of a vehicle stock. Nvidia, but that was all on positivity around Trump taking an absolute plane full of tech giants over to China to have a chat with the Chinese. That's a serious, massive risk having all of those people on the plane. So we're talking Jensen, Elon, Tim Cook, Donald Trump, all on the same plane. It's like, what happens if that plane goes down? That's an absolute disaster. Tech stocks would probably be off more on the back of that than they would be on anything else. Anyway, probably Air Force One, so probably pretty well protected. So the gap between PPI and CPI annual rates widened to 2.2 percentage points. That usually means, that CPI will catch up. If you want to find a positive in this, and you really are kind of polishing the turd, I've got to say, is the contributing components to the Fed, the most highly watched Fed indicator, the PCE, were actually pretty benign. So, they're obviously the stock market's just decided that it's transitory, despite the fact that oil's still really high. So they landed in Beijing. There was a full red carpet. It's first visit in 7 years. It'll run today and tomorrow. So expect there to just be an absolute landslide of, fantastic, greatest deals ever, yada, yada, yada. I'm not going to do the voice. I'm not very good at it. And, the priority apparently being trade, not Iran. And he's very much got Iran under control. Unfortunately, not the Strait of Hormuz, though. So there was some stuff tabled as well from OpenAI last night, maybe being willing to come to the table on an AI governance regulatory body, and kind of like the International Energy Agency. I categorically think it's a great idea. Just enormously surprised that it's OpenAI, to be honest, because ethics is not what not really in that there's the descriptive category for Sam Altman. It's kind of been a little bit the opposite. So look, the S&P rallied a little bit, the Nasdaq rallied 1%. Aussie market's still getting hammered. Like CBA got smoked yesterday. The budget's had a massive fallout. People are really concerned around, what this is. The removal of negative gearing is pretty much just going to remove a very large chunk of buyers I would say particularly in the units market. And it's also going to cause, for those who have not invested wisely, or they've just invested just purely on negative gearing and they're not getting a proper yield out of it and they're paid too much, they're in for an extraordinary rude shock. And I would say that there will be a fair bit of panic around that space in the next maybe 6 to 12 months. For those people where negative gearing isn't the aim, it's the bonus, they'll just write it out like they always have been. But But we've seen the likes of, CSL and Cochlear and some of these really big blue chip names in the last sort of 24 months have, when shareholders are pressed and when they're challenged in stocks like that rarely have ever gone down in their history, there tends to be a bit more panic from those investors because they're not used to being under pressure. And I would say that this is, there would be it'd be similar in the property market. But look, I'm speculating, completely anecdotal. But look, it's going to put pressure on LVRs. It's going to put pressure on investment loans. The banks seem to have been getting ahead of it a little bit, but CBA on top of that disappointed slightly on their earnings. And them and Westpac are the two most exposed to mortgages, and essentially. So look, it's just one of those things that thankfully stock markets, and equity markets and equity indexes, etc., we can still use leverage. We can still claim it. Negative gearing still applies. It still applies for commercial. So yeah, our buy the dip strategy, which is sort of, closing or closed, essentially, but will come up again because it's been stupidly popular. We still get the negative gearing, deductions there. So, and it, I dare say, we were doing the investment anyway. It didn't really matter about the tax, which is how you should approach all investments. But it's a nice bonus. I've got to say, it's a nice bonus. So yeah, silver was still up overnight. We're approaching $90 again now. It's flying under the radar as it stands, but I think started to wake up a little bit last night in terms of getting coverage on social media. One of the big reasons being China just out of nowhere bought a record amount of in 1 month of silver, which, everyone knows I'm a massive silver bull and a massive copper bull. I like platinum as well. So yeah, I'm, looking at this chart, this is kind of, this is my one of my favorite charts. Loving it. Gold, we had that run for me, like, I think it's going to rally, but I think there's, silver, copper, platinum, particularly, could do with a rally, and this is in spite of the fact that the US dollar's actually rallied as well. So yeah, long live this rally. I think copper is. I've been a massive bull of copper for ages. I think that underinvestment in copper mines and the sheer necessity of it for everything we're doing, from data centers to renewables, etc. Just means that there's going to be a massive hole at some stage, and we're going to get one of those squeezes, potentially like that nickel squeeze. But yeah, just having a quick look. This was a great chart from Reuters. This is just showing. So that purple line there is the PPI number, and that core PPI number. But as you can see here, we got like core CPI, core PCE, core PPI, average hourly earnings, and it up the keys up the top there, and they're all turning back up. So we all know what happened on the left-hand side of the chart there in 2022 when inflation went through the roof. We had that massive dip. And it did bounce out. It was probably one of the best buying opportunities. But yeah, look, if this starts to head higher, equities can only swim against the tide for so long before they get tired. As someone who got head faked into FOMO, March, April 2022, and probably bought it a little bit too early. Won't be making that mistake again on this one. So I've written an article around the budget for livewiremarkets.com. You can follow me on Livewire Markets, or you scan that QR code there. You'll get it through. Or you can go to livewiremarkets.com. You can follow me on there. I write pretty regularly. It's always pretty actionable, but basically this one's, which it's starting to get a little bit of traction already. Wrote it yesterday, but look, Australia's lazy investment strategies is finally dead. Okay, and I absolutely feel for those of you who have got existing investments or whatever. But these tax, like, in the long run, apart from this transition, which is highly unfair on many investors and people, that policy was, I don't think was ever designed to be used in the way it's been used. And look, tax policy is not going to subsidise mediocre strategies and lazy strategies, mediocre returns. And look, replacing them, I think, will be actually end up being a positive change for if you're a smart investor. So, lazy money in property, where basically the property market is so stretched on a valuation standpoint, it's probably going to have to come back into equities. Well, then, it might be. I think you'll probably find, if you're using strategies like our buy the dip strategies or our modern 60/40 called the Wealth Engine and things like that, which we've designed around, beating property, including negative gearing and all that crap. Like there's streets ahead now with the negative gearing's been taken away on that side. You'll make more money. So in my opinion. So yeah, obviously, past performance is not an indicator of future, but I think it in the long run will be a positive change, albeit a bit of a painful one for many people. So scan the code, have a read if you want. We are going to do some podcast sort of style interviews with an accountant that specializes in tax strategy, and the CEO of Stropro, which is Australia's largest structured products vendor, and ranked number 14, I think, on the fast starters list for the ASX 100 fast starters, and run through some options on how you can invest better. So have a look out for that. I'll chuck them. You'll be able to get them on YouTube. I would imagine they probably won't be on Spotify, but I'll see how I go with my technical skills. But yeah, I think there'll be a bit of knock-on effect from from negativity around the budget and the ASX today. People will be just waiting for look, to be honest, the US market is a little bit mental in my opinion. AI or not, the fundamentals always come home to roost in the end, and I would be more following what the ASX is doing at the minute and with an air of caution than I would be, being a bit overly optimistic. So, yeah, that's just my opinion. You do with it what you wish, but have a great day, people. For those of you who watch AusBiz, I'll be in the call today for the US edition. Got the likes of Nvidia on there, which reports next week. Caterpillar, which we had last week. There's a few interesting ones in there, actually. Thales, which is a French defense company and things. So it should be pretty interesting viewing. So tune in at 12 o'clock or watch it on demand at ausbiz.com.au. Cheers, guys. We'll speak again tomorrow.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.